Welcome to the Private Investors Podcast, the podcast where keen stock pickers Mark Atkinson and Maynard Paton talk about managing their share portfolios. Mark began buying shares in 1984, while I started in 1993. This time we cover System 1 and the investment potential of testing adverts. Let's get started.
Hi Maynard, it's good to see you again. Here to talk about System 1 Group, ticker symbol SYS1, which is an advertising testing business. It is your largest holding, I believe. And I recently watched the annual general meeting online and you were there in person.
Yeah, I was. This was my fourth System 1 annual general meeting attendance. And I've got to say, out of all four, this was the least satisfactory. The AGM revealed some protest votes against some of the non-execs and other resolutions as well. So I think the directors were a little bit reluctant to answer awkward questions from a certain shareholder in the front row. But there was some useful chit chat after the cameras were switched off after the formal meeting. So we can discuss that later in the podcast.
Yeah, absolutely. How long have you actually owned the shares in this business?
I bought these shares initially 6 years ago. So March 2016, I purchased them at £3.25, and it was a 2% position initially. And within 18 months, the shares got up to £10. So I tripled my money in 18 months, which was fantastic. But the fool that I am, I never sold. And I've never sold any System 1 shares. And there's been various mishaps at the company since then, and I've been hoping for a turnaround. So buying more shares at 238 in 2018 and 185 in 2020 and 242 in 2021. And so my average price now is £2.12 and the shares now are £2. So it's been a pretty disappointing 6-year investment so far. I've only had a few dividends and they stopped a few years ago. So not the greatest of investments, but I think what's keeping me holding this share is the product the company's got is really good. I think it's got a good niche service and the company has ambitious plans. It's trying to disrupt the advertising testing industry. So it has a market share of less than 1% now, and it's trying to reach 10% market share. That's the ambition. And if it can get there, the company said publicly that could support a £1 billion market cap. And you think the market cap now is 30 million. So if we can get to this 10% market share, there could be huge upside for shareholders. The trouble is that the company's since toned down its expectations because it had a sales warning earlier on this year, and one thing has led to another, and shareholders have become fed up with the fact that this good product has not been exploited to its maximum potential by the current management. I think shareholders have become fed up. There's a strategic review underway, which if you read between the lines, they're talking about external investments and new partners. I think the strategic review could be the first step towards some sort of sale of the company.
Yeah, it was previously known as Brain Juicer, and I can see why you were attracted to it. It had some special dividends, high returns on capital employed. Management had a large, or one particular part of the management had a large share of the business. So I took a small initial stake. I do my groundwork ahead of making that stake, kick the tires, look under the bonnet. But I still find that when I bring in that small initial holding, that enforces me to do some further research. I did that. I couldn't really get my head around it as a business. What does it do?
I'll try and explain what it does. I can understand that because for years before I bought the shares as Brain Juice, I never understood what it did, but I'll do my best. So you're a Unilever shareholder, aren't you, Mark?
Correct.
And let's say you're working at Unilever in their marketing department, and your boss says to you one day, Mark, you've got to sell more Cornetto ice creams. So what do? You think, I know, I'll advertise on TV, make a TV advert, put it on TV, and Cornetto sales will increase. So do you just put the advert on TV and hope for the best, or do you test the advert first? Because if you just put it on TV without testing it, maybe you're going to waste a lot of money and your career at Unilever is going to be cut short. So you go to System 1 with a rough cut of your advert and they'll run it past their online panel, and the panel will give it a rating out of 5. So if you get 5 stars out of 5, your advert's great. You're going to sell more Cornettos. If it's 1 star, then it's going to be a waste of money. You've got to go back and get a different advert. Maybe it's 3 star. So System 1 could say, maybe you could change the music or cut short the advert or do some other alteration to get it up to 5 star, which will really boost your sales of Cornettos when it's shown on TV. So effectively, System 1 can help tell you whether the money you're going to spend producing this advert and spending it on TV, broadcasting your advert is actually going to be worth it or not. And they can also test your ideas as well. So maybe you think, I want to sell more cornettos. Let's launch a new flavor of cornetto. So you've got chocolate at the moment, strawberry mint flavor. Let's try lemon flavor. Do you think that's going to work? Or orange flavor, or lemon and orange. So you come up with these ideas, you produce some creatives, how these products are going to look, and you can run them past the System 1, and then they'll come up with their verdict. System 1 will say, would you buy shares in a lemon flavored cornetto? Your immediate answer is yes or no.
It's a no from me.
It's a no. Okay. So maybe lemon's not a great idea, but maybe orange is, or you can go to System 1 with a different product range, different flavors, and maybe one will come through as a potential winner, and you can work on that. So they can test your advert, test your marketing idea, and also test your brand. Do you recognize the cornetto? Have you heard of cornetto? Just to make sure that your brand hasn't faded from the public's mind. And if it has, then you really need to kickstart your advertising again. So I hope that explains what they do in a roundabout way.
Yeah, that's a lot better for me in more like layman's terms, because with the name change from Brain Juicer to System 1, that isn't a unique term. That's something that's been around for quite a long time. And that's in the world of behavioral science, which I've very little knowledge about. Have you any particular thoughts on the name changes?
I think it's better than Brain Juicer, because there were one concerns about when you in companies, when you go to the boardroom and say, oh, I've got this supplier, it's called Brain Juicer, and people would look funny. The CFO would look funny. But the System 1, that System 1 name has been around for some time, popularized by Daniel Kahneman, I think, with his book. And System 1, they differentiate from the competition because they test on feelings or emotions. So when you watch an advert, does the advert make you happy or sad or disgusted? Whereas other companies will test on other things. And so System 1 have a concept of that if you feel more when you watch an advert, you buy more. So if an advert makes you really happy or entertained, then you're more likely to remember that advert and actually buy the product later on. I'll give you an example. The other day, I saw an advert for Virgin Media, and it was about a cow on a motorbike. The cow's looking through the window. He sees the motorbike racing on the TV, and then he sees a motorbike outside. He gets on the motorbike and starts driving the motorbike. And you think, oh, that's an entertaining advert. A cow on a motorbike. I wouldn't mind watching that advert again. Whereas you think about other broadband suppliers, Sky or EE or TalkTalk, and they're talking about download speeds or data allowances, or they've got this 20% off sale, and you think, oh, I don't want to watch those adverts. I want to watch a cow on a motorbike. That's more entertaining. So half the battle of advertising is just trying to get people to watch the advert. So I don't mind watching a cow on a motorbike. And that's what System 1 will test. Does this advert make you happy? What is the emotion? And it makes me smile. It's a cow on a motorbike. But when I'm in the market one day for changing my broadband supply, I'm going to think, okay, am I going to be thinking about BT and their data allowances, or Sky with their 20% off sale, or am I going to be thinking about this cow on a motorbike? And I think I'm actually going to be thinking about the cow on a motorbike and Virgin Media.
Yeah, it's a bit like the Go Compare and the Opera Singer, a bit like
yeah,
that,
it's all those adverts where they're enjoyable to watch.
Yeah,
that's the key. Most adverts are not really that enjoyable to watch, and System 1 emphasizes to their clients, you've got to make sure the advert is entertaining.
Yeah, so System 1 is a bit more our gut instinct, our instinct, as are we instantly feel, and System 2 is a more of a deliberated approach. Is that
right?
right?
A lot of marketing people think we sit on the settee watching these adverts really carefully. I think, and we're comparing the download speeds, let's say for broadband and data allowances, and I don't think that's the case at all. You just think, oh, I'm sick of Kevin Bacon for EE talking about download speeds. He's irritating me now. So if I'm on the System 1 panel, I'm saying that's a 1-star advert, whereas a cow on a motorbike, I'll watch that.
Yeah. At one stage, this business, it seemed to be going gangbusters when it was Brain Juicer. And it was about the time that changed to System 1. A few little wobbles came along. Was there any connection between those at all? Or was that just purely coincidental?
I mean, they changed the name, they changed the year end. This was about 5 years ago, and you think it's a bit coincidental. They've been floated for 16 years now. And I think the early years, they've done pretty well. The original business was consultancy work. So clients would come on an ad hoc basis, and the consultancy contracts would get larger and larger, and they did really well. And then all of a sudden, some of the contracts dried up, budget cuts. And so you had this haphazard track record of the last few years where the company's trying to shift from ad hoc consultancy work to a more predictable data business where the customers come to System 1 and then rather than with a big project, they will come to System 1 and with your, let's say, Cornetto ad, just upload the ad onto their platform. So it's an automated process. You upload your ad onto the platform, you pay your fee for the report, and the report comes the next day with your rating, and it's all automated. And it's a more of a predictable business. And the idea is to build on this platform data automated service business where at some point the revenue will come to a point where it will cover all the fixed costs. So any extra revenue beyond a certain point will mostly all flow to profit. So the holy grail of this shift from consultancy work to automated data services is becoming a platform similar to a bit like Hargreaves Lansdown and Rightmove, where you've got these high margins and where your incremental revenue all turns into profit. That's the idea. At the moment, this is what I picked up at the AGM, was this new style data business isn't profitable at the moment. The old style consultancy work, ad hoc work, one of the directors said that was really profitable. And so you've got this dynamic tension within the business where they will really want to shift the new style automated data processing, which is the better business long term. But the old style work makes money up until earlier on this year when they had the sales warning, which reflected the old style work where some of it had dried up in the States. So the track record is up and down in the last 5 years. And yeah, I can understand why some shareholders have become fed up. This is the point at the AGM where the protest vote and the strategic review was announced a few weeks ago. They've got this really good product, it works, but is it being maximized to its full potential? And you look back over the last few years, yes, there's been a pandemic, but it hasn't been maximized to its full potential. So we'll see. The company has underperformed.
One of my concerns, I think ITV is their jewel in the crown of their customer base. But we mentioned about System 1, and they're not the only people who can implement this.
ITV are a partner. So if you go to ITV with your advert, they will now refer you to System 1. They'll say, maybe you should try out testing your advert with System 1 to improve it. The partnership started in January 2020, and I went to the industry launch presentation. Kate Waters was there. She's from ITV. She's a senior executive from ITV. She stood up saying, ITV want people to fall in love with the adverts again because they want the adverts to become more effective. Previously, ITV would just take your money from your adverts, regardless of whether your advert worked or failed, they'd just take the money. But now things have moved on, times have changed, and the advertisers want more bang for their buck. Otherwise, they'll put pressure on fee rates they pay ITV. And so talking to Kate Waters after this event, we spoke all around the industry, trying to find a service which would improve or test the effectiveness of ITVs, and couldn't find one. She said they were facing the prospect of having to develop this testing service themselves until they found System 1. So that tells me at least 2 or 3 years ago, there was no one exactly doing what System 1 were doing because ITV had looked around the industry. So that tells me System 1 have got some sort of unique processing, which ought to be good for shareholders if no one else is doing exactly what they're doing. If ITV have teamed up with System 1, the service must be good, surely. There are so many other larger competitors doing advert testing. So you've got Nielsen's, Kantar, Ipsos. But why did ITV choose System 1 when you've got these other largest competitors? Because the service presumably is really good. I'm not an industry insider. I can take from this ITV partnership. If ITV think it's good, and this year's World Cup, there'll be another competition from ITV where they'll test all the adverts with System 1, and the winner gets a free advert during halftime during the World Cup final.
Okay.
And there's other joint studies on diversity and older viewers with ITV. So the partnership with ITV seems to be deepening, and it validates the whole concept I had that this product that System 1 has is really good.
All right. So you were at the AGM.
What did you think of the AGM first? Because you've watched it. I know you've got strong opinions. So what's your view on what happened?
It was certainly interesting. If anybody wants to watch it, it's on Investor Meet Company. You can find it on YouTube. It lasts about 40 minutes, but about 20 minutes of it is the quite formal voting process. But I thought it was a bit of a PR disaster, I've got to be honest with you. You were very prominent in the front row, but we could hardly hear you. The audio was very bad.
Yeah, the audio. I wasn't handed a microphone. So
well,
if you
that
watched
would have helped.
Yes, if you watched it back, there was a question online about the strategic review. What's happening with the strategic review? So the chairman gave a short speech about the strategic review and invited Sophie Tompkins, who's a non-exec. The non-execs are leading this strategic review. She's in charge of the review. So she stood up and she was given the microphone straight away. She speaks for a minute, not saying very much, but given the microphone, sat down, hands the microphone back. You think, okay, back onto the questions. And then, no, why aren't I giving a microphone?
Yeah.
Eventually I'm giving a microphone and then it's not switched on and, oh, where's the button? Oh, let me find the button. Oh, there it is. And then I think shortly after the meeting was drawn to a close.
Yeah.
So it is handled quite badly. I'll let listeners watch the video and make their own decision. But the protest votes against some of the non-execs was, I think, unnerved the directors, and they didn't want to talk in depth about the business perhaps, or answer awkward questions on camera. Was it deliberate? I didn't get a microphone. I don't know. I sat down at the meeting and there was the shareholder registrar people approached me and said, are you a shareholder? And I said, yes. And they gave me the wrong form to fill in, the registration form to fill in, and did not give me a voting card. So if you watch the AGM back, the chairman's talking about voting card and filling in your voting card, and there's no one there apart from me who was a shareholder, and nobody filled in their cards. So I wasn't given a microphone, wasn't given a card to fill in. I'd voted electronically before, so it wasn't a problem. But you just think these little things, was I really welcome at this meeting? It's a shareholder meeting, and you just got the impression that it was some sort of works do.
Yeah.
And, oh, there's a shareholder's turned up. Oh, that's a bit unfortunate because we've got to go for the rigmarole of all these questions and then we can get chatting afterwards about work. So, yeah, to be fair to System 1, I've been to 4 meetings, and previous meetings, which were not broadcast on Investor Meet, they quite happily sat at least for half an hour, 40 minutes with Q&A. There's other shareholders there at those ones. So there's lots of back and forth with the Q&A. John Kieran, the chief exec, once at one of those AGMs, he did a presentation. So he was there for 15 minutes talking about the business. At this meeting, if you watch it back on Investor Meet Company, there's a big screen at the back. And I thought when I sat down, oh, it's going to be a presentation because it's going to be broadcast live on the internet. And no, there wasn't. It was just the resolutions and questions from me. So it was a bit disappointing. The issue is that they've had a lot of protest votes. There's a strategic review, and behind the scenes, I think there's something going on, and the directors didn't really want to talk about it, especially not on camera.
Yeah.
And there's a bit of friction going on between some of the non-execs, presumably, and some of the shareholders and execs, I think. Or
I'll expand on my thoughts in a moment about the meeting, but just on the actual voting, there were some large votes against the directors, and one of the resolutions, which was the disapplication of preemption rights, which I think in English is any new shares in the business need be issued existing shareholders in the first instance. That was voted down.
Yeah, so the directors can't just issue shares willy-nilly. They need to effectively double check with existing shareholders first. So they can't do that anymore. Yeah, there's protest votes against 2 of the non-execs. So the votes cast, 35% voted against 2 of the non-execs. And these 2 were media, what I call media types. So they'd worked in the media industry. The other 2 non-execs got effectively 100% for votes. They had a landslide for vote. Both of those 2 had financial backgrounds. Remember, this strategic review is all being handled by the non-execs. So if you get rid of the media non-execs, you've just got 2 financial type non-execs looking after this review. One of them's an ex-stockbroker who's been involved in M&A, and the other is a representative of a German shareholder who's quite unhappy, who I think has been triggering this strategic review in the first place. So it looks to me like they wanted some of the non-execs out to clear the way for a straightforward strategic review, which ends up recommending the business put itself up for sale. And if you look at the voting RNS that was issued after the AGM, what's included there is, within the strategic review, is evaluating the composition of the board. This might mean kicking some directors out, non-execs out, or bringing some new ones in who may think, actually, time's up for the executives now. We probably need somebody else to come along and get the most out of this service, this advert testing service, which is actually pretty good.
Another thing I thought was quite odd watching it online was generally you've got the board sat in the front with the 3 members. There was a chairman, the CFO, and the CEO, and the non-execs were they sat alongside you or behind you? You know, I would have expected them to be there and to be able to face any potential questions that you could put forward.
It was a bit awkward. I got into the room and there's the front row empty. And I thought, I'm going to sit down on the front row. And the non-execs, the three of them, there's 4 non-execs, and 3 of them sat down on the other chairs on the front row. And the non-exec, who's a representative of the unhappy German shareholder, he sat on the second row. So I'm not sure if that was just the seating arrangements or he didn't want to sit, he didn't get on with the other non-execs. I don't know, but they were all there. It was all a bit awkward. I'm not sure if it was there for the cameras where they just wanted the 2 executives and the chairman because of the cameras there. The whole event all seemed a bit peculiar because there was probably about 12 people there, 12 to 15. And so you had probably a broker, auditor, lawyer, shareholder register people, the family members of the directors, they were there. So it all seemed some sort of big social do. And you get the impression I was interrupting that event because of I'm a shareholder. I did think afterwards, well, hold on, I'm the only one here who's not being paid to be here. I'm the shareholder. Everybody else is part of their job to actually attend this AGM. There's senior executives there from the company. They're all chit-chatting away, presumably about work and whatnot. And you think, oh, I'm a total outsider here. But as I said, previous AGMs, they've been very welcoming and very forthcoming. But this time, not the most, not the greatest of meetings, really.
I mean, I've got to be honest with you, and I've watched it several times. You've got to remember that the annual general meeting is the one opportunity that you've got a year to pose questions to the board. Gone out your way, you've gone there in person, you've gone to the time and trouble of going there. And I would say that the way in which the chair treated your questions, I thought was quite disrespectful, without trying to embarrass you. You've been a shareholder for a number of years, you've got a following, you know your subject. And for me, at the beginning, they said questions are encouraged. They've gone to the trouble of putting this annual general meeting on Investor Meet Company to find a wider audience. And then when they do it, they seem to want to wrap it up as quickly as possible.
Yeah, I think a few things there. Maybe they were caught out with the protest votes, because I don't know at what point they realized, oh, hold on, there's some dissatisfaction among shareholders and some of these non-execs may get kicked off the board at some point. So that could have been notified to the board late in the day. They already booked the Investor Meet Company broadcast and then found themselves in a difficult position with how the voting turned out. But you're right, it's not great. And you're right, the shareholders should have a chance of having a frank discussion with managers and the board. The chairman says, okay, give your name. When you're asking questions, make your questions succinct, give your name. But in a Q&A session, it's going to be a back and forth, isn't it?
Yeah.
You're going to not give succinct questions sometimes. You're going to give a statement.
Yeah.
Rather than a question.
And sometimes a question necessitates a follow-up, doesn't it?
It does, yeah. We're online. You can sit at home online, put in your question into the Investor Meet platform. Yeah, great. You don't have to go and take the trouble to actually go to the AGM. But it looked to me they had prepared answers for the strategic review. I asked the question, whose idea was the tender offer? System 1 had suggested during the summer that we're going to undertake a tender offer, which was then cancelled and replaced by this strategic review. So whose idea was that? The chairman didn't answer that question and didn't give me an opportunity to follow up. If you make the trouble to go to that meeting, then you should have a frank discussion. And to be fair to System 1, we've had frank discussions before about the business, back and forth in a Q&A in other AGMs. This one, though, because it was broadcast and being recorded, I suspect they were more circumspect.
Yeah.
But in a smaller company, there's only 1 or 2 people, maybe 2 or 3 shareholders turn up. They know what they're talking about. Why not have a frank discussion? That's what AGM should be about. Yeah. Not this sort of formal, oh, it's not in the rules.
Yeah.
Or let's have a chit chat after the formal event, because we all want to know exactly what the directors think. Yeah. And in the post-meeting chit chat, it's generally one-on-one. So yeah.
As a shareholder, you own part of the business, don't you?
Yep.
And on the chairman, Graham Blashill, who was the outgoing chairman, he's been a director for 10 years. And he's described as an investor and a director of several venture capital backed ideas. And he owns 10,000 shares, which at today's price is about £21,000. Now, it's your largest holding. I would suspect that your holding is in excess of that.
Yes, it is. If I was on the board, I would be the second largest shareholder on the board after the chief exec. He owns 22%, the chief exec. So I don't own that much, but I own more than the rest of them.
And I was just wondering if you are familiar with Section 319A of the 2006 Companies Act.
I am not, Mark. No, tell me about it.
Okay, that is questions at meetings. Item 1, at a general meeting of a traded company, the company must cause to be answered any questions relating to the business being dealt with at the meeting put by a member attending the meeting. Item 2, there's always a few caveats in these legalese. No such answer need be given. A, if to do so would interfere unduly with the preparation for the meeting or involve the disclosure of confidential information. I don't think that was the case in any of your questions. B, if the answer has already been given on a website in the form of an answer to a question. Or C, it is undesirable in the interest of the company or the good order of the meeting that the question be answered. Now, that's always a little bit nebulous, and I suppose gives the chairman a little bit of wriggle room, but really the point is the question should be answered.
Yeah, you're right. You turn up, you should be answering. That's the job of part of the job of being a chairman. He gets paid a fee, and it's part of the job to handle the meeting, whether it's good order. If you watch the video right at the end, John Kieran, the chief exec, says a few words about the chairman. Chairman's retiring, 10 years. Well done, Graham. And then he says, we're all off for a special lunch.
Yeah,
Think,
was that a good lunch?
I wasn't invited.
Oh, sorry, I'm sorry.
I was just a shareholder.
Yeah.
So that's why some of the senior executives were there, presumably, because there was a special lunch for the chairman afterwards. So it gives a bad look where you're saying we're having a special lunch for the chairman, and you wrap the formal part of the meeting up pretty quick because maybe they've got this special lunch booked and they're all going to clear off there. And oh, by the way, shareholders are not invited. Yeah. So it's not a great look.
That looks pretty crass, doesn't it? It's not very tactful at all. That
no,
really.
That's John Kieran, where he says we're all off for a special lunch. Fantastic. Yeah. Oh, by the way, shareholders, you're not invited.
Yeah.
All on shareholder expenses, no doubt.
Just on John Kieran, he owns about 22% of the business. I'm just wondering what your thoughts are on having a marketing person as the CEO. Is that the best person to have? Or do you need marketing people that I've met generally like spending as much money as they can get their hands on? Or do they need somebody from a finance background to rein them in and just keep them under control?
Good question. He is a marketing person. And if you've met him, he is Mr. System1. So he's really enthusiastic about this business. And the question I've had over the years, is he overselling System1, the potential? Last year in the annual report talked of this business becoming £1 billion market cap. You just think, is he overselling this? Is he just realistic? He's a marketing person, so he is going to be bullish and oversell things. But in the past, the business has been fine. You mentioned earlier about it was high margin, high return on capital, special dividends. So there is a business brain there, holder orientation there. Yeah, he's very enthusiastic. And I like him. I can imagine him being really enthusiastic for the employees. So in like some sort of company meeting, he can really get people motivated. But is he overselling it to shareholders? I suspect he has done in the past. But you've got partnerships with ITV, and also now you've got unhappy shareholders with this strategic review. So John, he's got to deliver on the promise of this advert testing business now. Promised a lot, £1 billion market cap, got to deliver. So yeah, time's now for him to deliver, I think.
Just on the point when the chairman mentioned about speaking offline after the meeting, was that followed through? Was that conversation followed through? Yeah. Yeah,
I spoke to various directors. I didn't speak to them all. I didn't speak to the new non-exec, Conrad Boner, who's a representative of the unhappy German shareholder, I think, who's been stirring up all the protest votes. So I didn't get to speak to him. I think he may have just left the AGM straight afterwards. I think two of the non-execs who had the protest votes, I think they left straight away as well. I didn't see them. I'm not so sure, but I didn't get to speak to them afterwards. I spoke to the chairman, John Kieran, the finance director, and the chief sales officer or chief growth officer. He was interesting. I spoke to him about his podcast. He's doing a podcast to effectively generate sales for System1. Apparently now he's converted 10 of his guests into real customers. He talks to other marketing people, chief marketing officers at different companies. And what was interesting is now people are asking him to appear on his podcast. You mentioned about Jack Daniels, the CMO of Jack Daniels, I think it's UK, Capital One, credit card business, and Krispy Kreme have all asked to come on his podcast. And they're all presumably going to have follow-up sales meetings with them as well. He talked about why some of the customers don't convert straight away. So he gave the example of Tesco. And Tesco are interested in this service, but they've had a ban on appointing new suppliers for the last 18 months. Anywhere in the business, no new suppliers. So they've not been able to appoint SYS1. And then he said, oh, that ban was lifted last week. So Tesco are now on board. They became a customer last week. He also gave an example of Kellogg, where apparently their advertising agency said, you've got to talk to System1 to help us improve your adverts. And Kellogg said, oh, okay. And they talked to a rival, I think it was Ipsos, about testing their adverts. And they went with Ipsos. And then a year later, they've just come back to System1 and said their predictions were rubbish. Their testing was rubbish. I don't think he used that word, but I think that's the impression I got. And they've now gone with System1. So it was quite informative, where he was saying some of these companies, they don't switch straight away. It's a bit like your accounting software, where if you've used this old style accounting software for years, it's an upheaval to change it for something new and faster and cheaper straight away. And that's the issue.
They call it sticky, don't they?
Sticky, yeah.
Sticky,
I mean, even though your accounting software is really bad, it's ingrained into your business. And that's similar to what System1 are facing now. These other testing methodologies are ingrained into these large companies so much, it's difficult for them to change, even though they're poor value for money, don't really tell you what you want to know. But people in the business have just got used to them. So it's just a very slow process of trying to convert larger companies to this apparently faster, cheaper, better service. John Evans, that's the name of the chief growth officer, he said, if they get a door open, get a meeting, they can convert 20 to 30% of the leads into some sort of conversion into a customer. So he seems quite bullish, but he is the chief growth officer, so he's not going to be downbeat. But yeah, he was interesting to speak to him.
Okay. So we've put all that through the mincer. Where do you feel the business is now? Is it a buy or just a hold? Or
I've not bought for at least 18 months. So I'm holding on. It's a large position for me, and there's been ups and downs since I've last bought. Since I bought, the company talked about becoming a £1 billion company in time, getting this market share. I thought, great. And then it's had this sales warning earlier on in the year. And you think, oh, you know, it's always one step forward, then one step back. So I'm happy sitting as I am holding. And I'll see what this strategic review is going to bring. There's a trading update, second quarter trading update, which is going to be released anytime soon. They've got interim results during November, and then the initial conclusions of this strategic review are due by the end of November. I think the next trading update and the interims are going to be pretty poor. The second half of last year, they just about broken even. And again, talking to some of the directors, after the cameras were switched off, they all talked about things have deteriorated a little bit with the economy since February, and there were a heck of a lot of budget cutting going on. That was the quote. A heck of a lot of budget cutting going on. I think the next set of results are going to be poor. And I think that will then trigger further action with the strategic review, where, remember, 35% of the votes cast were against these non-execs. So there's a big swell of protests here about what's going on. They want some action. I suspect it won't take much for some of the other institutions who didn't vote or voted for some of the non-execs to actually change their minds, especially with the performance of the market at the moment.
Yeah.
System1 shares there. Next year's AGM may be a lot different to this year's AGM if they actually remain independent. I think if the next results, sort of 6 weeks could be crucial. I think if the next results are pretty poor, then there could be some action on the review. Yeah. Put the business up for sale.
Yeah. So you get the sense that the game is afoot there, isn't there? There's something going on.
Is there anything I've said that has tempted you back into this business?
I've got to say, for me, it's a non-starter. And there's several reasons. And the main one being that when Matt sent us that email the other week asking what's the key deciding technique, the biggest one, first and foremost, is about me. I'm not wired up for this kind of business that's involved in behavioral science. I'm more of like what I describe as a meat and potatoes investor. I can understand some are all concrete leveling machines and Greg's pasties and sausage rolls. This is way outside of my very small circle of competence. Secondly, I'm not totally convinced there's a massive moat there, that some people can't replicate exactly what they do. And thirdly, just the drip of that the attitude towards shareholders, really. And like the AGM was almost like a bit like Omerta, the Sicilian Code of Silence. It was like, let's close ranks and let's just call it a day. So really, to paraphrase Duncan Bannatyne, I'm out. Well, that's it.
So you mentioned the moat, Mark. System1 have tested every advert broadcast on ITV and American TV for the last 5 years. So they've got all this data. There's 80,000 adverts, I think, in this database. And so to prove that the five-star ratings work, they can say, oh, well, look at the database. This advert had a 5-star rating, and look at the sales of the product that was advertised later. They've gone up. This advert had 5-star rating, and look at the sales of the product. It's gone up. And it's difficult for a competitor to replicate that because System1 have been doing this for 20 years. They've got all this data and all this analysis, tested every advert for the last 5 years. So if you're a competitor wanting to start up today, at least 5 years behind on my data, because the customer needs proof that your ratings work. Anyone can set up an advert testing business, dish out these ratings, great. But you've got to correlate your rating to what actually happens in real life with the sales of the product being advertised. That's the difficult bit. The System1 have got all this data. So if you're starting afresh, you don't have that proof. And you're never going to have as much data as System1 because you're always going to be behind. And why would you go to someone with less data than System1? That's the moat. That's what ITV have seen. I should have been out when the shares were £10, but I've stuck with it. We'll see what this strategic review brings up. I think that could be the catalyst for some sort of return here. But yeah, let's see.
Okay, we'll watch that one closely.
Yeah. Well, that's it for this time. Thanks for listening to the Private Investors Podcast. If you enjoyed the podcast, please let us know by liking, subscribing, or even leaving a review. Until next time, thank you and goodbye.
I was just thinking, Maynard, having reflected on our meeting, for a marketing business, they don't seem to market themselves very well.
Yeah, that's the complaint I've had. One of the AGMs have said to John Kieran, look, you're a marketing business. You tell people how to improve their adverts, and yet your marketing's awful.